Good morning. It's Thursday, August 7th. This is To My Liberal Friends. I think it will come as no surprise to people that Donald Trump is a fan of using tariffs in his foreign policy. He's been outspoken on the use of tariffs for well over 20 years. It's not something he's landed upon recently. Trump has long believed that other nations have abused the United States by using our market while protecting their own. The trade imbalances that have existed for decades are the evidence that he believes show the inequities in the world economy. Now, he's correct when he points out that other nations have used various techniques to blunt U.S. exports while availing themselves of the consumers in the U.S. marketplace. In recent months, the president pledged that a new tariff regime would slash the trade deficit and force manufacturers to move production back to the U.S. His detractors warned that tariffs would spark sharp inflation and even shortages in the stores as soon as this summer. Well, 6 months into the experiment, with more tariff announcements likely in the coming days, the economy hasn't crashed. Inflation has ticked up but not soared. Consumers aren't finding empty shelves. Trump promised tariffs would bring in huge amounts of money to the U.S. Treasury, and estimates are now they've produced well over $100 billion. More importantly, from my point of view, the new data out this week shows that our trade deficits for the month of June was at its lowest level since September 2023. Now, Trump's critics downplay that point by saying it was simply a result of the huge import surge that took place before the tariffs took place. We'll still have to watch this and see if this is truly a trend or simply a blip in the process. And it's still early days and much is unclear. Trump has set today as a deadline for many nations to reach trade deals with the U.S. or face higher tariff rates. A trade truce with China is set to expire August 12th, and another with Mexico expires in October. Now, some economists expect the higher tariffs to inflict damage by pushing inflation higher and contributing to a slowdown in economic growth. Well, GDP rose at a 1.2 annualized pace in the first half of the year versus 2.5% last year. But for now, those economists have been wrong because their biggest fears and projections have not come to fruition. The most recent inflation reading showed consumer prices rose 2.7% from a year earlier. That was faster than May's increase of 2.4%, which is a sign that some goods are getting costs, but the impact so far has been milder than many expected. More clarity will arrive next week when the July inflation data is released. Now, many recent consumers haven't felt more price pressure is pretty obvious. Many U.S. companies for now are absorbing the extra tariff costs because they're reluctant to lose customers by hiking their prices until they absolutely must. At the same time, there are also clear indications that many foreign suppliers, especially those of Chinese goods, are now carrying an extra 30% tariff, that they're cutting their own prices to help ease the cost to consumers. As some examples, tariffs have reduced the profits at RTX, the aerospace and defense company. Hasbro, one of the largest toy companies, said the financial impact of tariff was less than expected because those foreign manufacturers are eating much of the cost. At the same time, some U.S. companies have used the threat of tariffs to raise prices, and some are unjustly. Walmart was found to have raised prices on many products. They're not subject to tariffs, and they've had to back off that. A little bit of corporate opportunism there. In the long run, the goal of Trump has always been to level the trading world so that other nations are not taking advantage of the United States. If he's successful in this effort, it would help the U.S. manufacturing and U.S. exporters. But that means we have to eliminate many of the non-tariff practices of other nations, where they set up quotas on how much they can buy of U.S. products. As an example, the United States is far more efficient in producing agriculture products than the smaller farms in Europe. But many of those nations have quotas on how much that we can send in there. We don't want to buy as much of our wheat as possible we can sell them, as much as our corn. And those nations have to start buying more U.S. agriculture products and quit putting up those artificial barriers to protect their small farmers. It's a tough political question for them, but one they will eventually have to be dealt with. At the same time, we have to realize that other nations can produce certain goods better than we are. Finally, there's a foreign policy goal in all this as well. Trump has slapped high tariffs on countries that are buying Russian oil, which helps Putin's war against Ukraine. India is a classic example, and they're a major buyer of the Russian Federation oil. In some cases, they're buying the oil and then turning around and selling it for a profit. This has led to a breakthrough in negotiation with Russia because if the Trump tariff policy can slow down the sale of oil to nations like India and China, then they will be cut off from the money they need to continue the war. Yesterday, there appeared to be a major breakthrough on that front as Trump and Putin are talking about a face-to-face meeting in the near future. So while some tariffs have negative effects, they can also have positive ones. But it seems that the media ignores those aspects of the trade wars. They're just like if Trump skews their coverage, and that does not benefit anybody in the long run. They need to cover it fairly. It's been To My Liberal Friends. Thanks for listening.